Hello and welcome to Blockchain Silver, the place where we analyze what in the world is going on in crypto. Today we're going to talk about when will the golden top arrive. Warning, I'm not a financial advisor. This video is for fun and entertainment purposes only. It is best to do your own due diligence, form your own conclusions, and invest based on your opinion of the market. Cryptocurrency markets are highly speculative and may lose value. Be safe out there. I also want to add the same about the silver and gold precious metals market. Nothing in life is ever guaranteed. So I had someone ask me, can you talk about silver and gold and where they are in their cycle? We sure can. I have established a few trading rules. Where the bear market ends, the bull begins. Where the bull market ends, the bear begins. I've also added some calculation factors. No bailouts. This is in today's calculations. No bailouts, no hyperinflation or superinflation or just big inflation. This would be just general inflation, 1 to 2% a year. No QE, quantitative easing. No excessive money printing. Also, no negative interest rates, and we're taking 1970s data and we're applying it to today. So in the 1970s, gold, the dollar was pegged to gold, and the Nixon shock happened sometime, I think it was in 70 or 71. And so President Nixon takes gold takes the dollar off the gold standard, lets the free market decide what it's worth. Gold goes up. It actually went up to 200, but it goes up, comes down. These are smoothed averages, so this shows like 165 or 170, but it actually went to 200, like 105, and then 850. And so $35, 200, 105, and ultimately going to about $850 before it then came down on a long, about a 21 year bear market. And so here's what it did. $35, 200, 105, went to about 240, which is about 20% higher than its old high, before it made its final parabolic run to $850 in January of 1980. And so what we're going to do is we're going to apply the data points. And so from $35 to 200, that's about a 571% move, or a 5.71x move. From that 200, then it lost about 48%. Goes down to 105, and then makes a final run to $850, about a 809% move, or a 8.9x move. And so here's all our data points. A to B, 5.71, or 571% move. Just take 200 divided by 35. B to C is a 5.25x move, or came down 48%. Just take 105 divided by 200. Then C to D was a 2.285x move, or 228% up from that low of 105. Just take 240 divided by 105. Then from D to E, it was a 3.541x move, or 354%. Take the $850 divided by 240. Or instead of doing this and this, you can just go straight from C to E if you want. And that was an 8.09x move, or 809%. Just take the top and then divide it by that last final low before it took off. And so this was it. This is what it did. Then it was over. So now today, where are we at in the golden bull of the 2000s? And so what it did, we ended in a recession in 2000, 2001. It was at about $260. Went to 1925. Then so far it has came down to $1,050 in December of 2015. And then this is where we're at today. I just pulled this today. So if we apply the same math of 260 to the 1925, that's about a 741% move. Then from there, it's came down to 1,050, losing about 46%. And if we saw something similar to the gold bull market of the 1970s, I would expect it to continue sideways yet till about 2,400 to 3,100. If it does the same, if it goes about 20% above the 1925 top of 2011, then we would be looking at it then having a parabolic move sometime after this area. And I don't know the time yet on that, but I got a pretty good idea on this. And so really just doing a quick, just looking at the old one from 35 to 200 to 105 to 850. If you just times this by 10 and times this by 10, you've almost got pretty similar numbers. Now this here, it went a little lower. This would be the equivalent of like $26 in today's time. But just look at, if this was 200 and this was 105, we would have the same exact price areas, 200, 105. Just times it by 10. And so it's real simple. So to come up with what would the top be and where are we at? Well, this is what I'm thinking. 8,500, just times that old top by 10. But because this was a bigger move, a 741% move compared to a 571% move, I've added a bull factor conversion of 1.297 because this did 1.297 more of what the old 1970s bull run did. And so that's a fact. So that's what's already happened. So if we saw something similar, you take the old 8.097 times it by 1.297, we get 10.49 from the bottom. And so that would bring us to this number. But if we don't see that, if we just see a similar move, a 800 or 900% move, then we're looking at about $8,000 or $9,000. If we see a little above that, we're looking at maybe $10,000, $11,000. Now remember, this is with no QE, no bailouts, no money printing, no hyperinflation, no currency crisis, no negative interest rates. This would be just in today's money what I would anticipate seeing. And so similar to the 1970s, this is about what we're seeing today. So it from A to B goes up 741% to this. Just take the top, divide it by the bottom. Then it loses about 46% of its value. I think that actually might be a typo. I think I should have put 40. When you start getting around the 50% area, so that's my bad. But you take the bottom, divide it by the top. Then we take the C to D area, not 2.96. The old one was 2.28, but we're timesing it by the conversion factor. So about 3,100, maybe 24 to 3,100. Same thing with D to E. The old one was 3.541. And we're taking that 3.541, we're timesing it by this. And we come up with 4.59 or 459%. So 2,400 times 4.59. Or you can just bypass the whole CDE conversion and just go from C straight to E. And this would be 8.09 to 10.49, or 1,049%. So just take that bottom of $1,050 times it by 10.49%, and this is about what we're coming up with. And so this is where I see it going. And so now we've got a price established. Now all we need to establish is the time. And so from here to here, it was about little over 9 years. And from here to here, I think it was 5.75 years. So now we got enough data that we can go ahead and plug the numbers in and see how much slower it's moving. And so let's take a look at the time factor conversion. So here's where we're at when we compare the two. So 1970s, we go up, come down, go up again, then go parabolic. Today, we go up to 1925. This was 2 years. This is about a little over 4. I'm looking for sideways action for probably another year, year and a half, 2 years, whatever. And then probably something parabolic after that. And so let's go ahead and figure this out. So we got the 1970s time factor. 1 month equals 0.0833. So this is what I do whenever I'm trying to figure out time. Instead of going, okay, January to March, January of 1970 to March of 1990, that was so many years and X amount of months. I just convert a month into a time frame, and then we can establish the data points. So this is December of 1970, when the 1970s golden bull run started, and it ended in January of 1980, which would be 1980.083. And so the whole thing, you just take 1980.083 minus the 1970.913, and it lasted for 9.17 years. This was the 1970s. So now, in today's time, we don't have D or E, but we got A, B, and C. And so we're going to take the longer of the two, because the longer of the two would be more accurate than just taking A and B. So we take A to C from the 1970s, and that was 1970.913. This would be A. This would be C. And so you just minus the two. 1976, this was like, I think, June, July, or August. I think it was August, actually, of 1976. Minus the December of 1970. And from A to C in the 1970s, it lasted 5.75 years. And so in the 2000s, same thing. 1 month equals 0.0833. A started in 2001. I think it was maybe April 2001. We came out of the 2001 recession, and it started. C ended in December of 2015. And so you minus the two. 2015.913 minus 2001.332. This comes out to 14.58 years. And so minus them, A to C, in the 2000s, it lasted for 14.58 years. And so what we're doing, we're just comparing this to this. And we're saying, okay, how long was this? How long was this? And then let's figure out the conversion. How long was this? Let's times it by the conversion, and then we can get an idea of this. And so the conversion lasted 5.75 years. I'm sorry, in the 1970s, lasted 5.75 years. In the 2000s, it lasted 14.58. Just take the 14.58, divide it by 5.75, and we come out with a conversion factor of 2.53. So now take the whole bull market run of the 1970s and times that by the 2.53 factor conversion, and we come out with 23.20 years. So now let's add the starting point of 2001.332, and that gives us, so 2001.332 plus the 23.20, we come out with 2024.53. So I'm expecting a top in the silver and gold bull market of 2024, sometime in 2024, probably June, July, maybe August. I think it's going to be in the summer, but it could be just sometime in this year. I also want you to understand that if I'm off by 1 month in any of this, from here to here, it could throw this off by easily 5 or 6 months. So I could be off. It could be end of 2024 or 2025, the beginning, or it could be earlier in 2024. So I just understand that I could be off. If I'm off by a month, which I'm sure I'm off by at least a week or two. I'm sure there's some rounding errors in here. And so all we can do is just go off this area, and then silver will generally do a 16 to 17 to 1 ratio of gold. And so you take that top, you divide it by that, and that kind of gives you an idea for silver to gold, where it will go. And so this is about what I see. We've got the bull market today. I think we're going to go around this area before we go parabolic. Once that happens, we're looking at June, July 2024, maybe the end of 2024, maybe 2025 if I'm off. If I'm off, I think it'll go out farther. I don't think it's going to come in tighter. I think it'll go out farther. And so another thing we can look at is the gold to monetary base ratio. This normally ends in the 4.5 to 5 ratio. That's where it ended here. Right before, I think we came off the gold standard. And then in the 1980s, it ended here at 4.5 to 5. So I wouldn't be surprised if we see something go like this for the next, 4, 5, 6 years, ending us sometime in 2024, 2025. But this is also another thing that I'm looking at. And so I look at what it does in both price, time, and then the gold to the monetary base ratio. Now also, this would be in US dollars, so it wouldn't apply to British pounds or a different currency. And so that's it. That's what we're looking at from here to here. This is what I believe. Again, no QE, no bailouts, no negative interest rates. And so remember, like I said, my disclaimer in the beginning, this is not trading advice. This video is just for fun and entertainment purposes only, and that's it. And so that's it for today. If you liked the video, be sure to like, share, comment, and subscribe. I want to thank you for coming over to Blockchain Silver, and remember to stay safe out there.